Episode of Entrepreneur TV. In this video, I'm going to give you the raw reality of where we are in the crisis right now, whether we're heading into deflation, inflation, or hyperinflation, and how this relates to the next stock market crash. I truly believe that the facts I'm going to give you in this video are going to shock you, hopefully enough to take action. And by the end of the video, I'll go through exactly what those actions can be. So first of all, let's talk about whether we're heading into deflation. Deflation is what happens when prices drop, mainly because we are demanding less, consuming less, and as a result end up also producing less. It's what happened back from 1930 to 1933, where every year deflation dropped prices by 10%. That led to the Great Depression. And this is the reason that so many governments and economists hate deflation. But deflation is already with us here today and actually started in Asia with the countries which were the first to be hit with the coronavirus crisis. Here's a story about China this week that came out. China's Producer Price Index, which measures cost of goods at the factory gate, fell by 3.7% year on year. And the CPI, which is the China's Consumer Price Index, the main gauge of inflation, also declined by 0.1% month on month in June, missing the expected rise to 0%. And here's another one. Deflationary pressure remains in Singapore. Singapore's headline consumer prices fell 0.8% year on year in May 2020, marking the third straight month in a row of deflation. So what are governments doing about this? Here's a third story here. In its quest to defeat deflation, the Bank of Japan has hoarded more than half of all government bonds. It has cornered the stock market via exchange-traded funds. It has expanded its balance sheet to exceed the nation's entire $5 trillion economy, and nothing has worked. So now the Bank of Japan may have happened upon a stealthy holy grail to revive Japan's animal spirits once and for all, its very own digital currency. The article is titled "Digital Yen Could Reverse Japan's Deflation" and is Japan's attempt at following what China is doing with the digital yuan by now creating the digital yen. And if you're thinking, oh, well, that's in the East, there's going to be a while before that happens in the West, here is an article from the European Union. In May, Latvia listed among 14 EU countries with deflation. Identical deflation to Latvia's was observed in Spain. Deflation was higher in Estonia, Luxembourg, Cyprus, Slovenia. Deflation was also found in Ireland, Greece, Croatia, Portugal, Italy, Belgium, Denmark, as well as Finland. And if you're thinking, well, at least it hasn't hit America yet, here is a graph from this week on the wholesale price index in the US, where it's now also gone into negative territory. And the CPI in America now has also gone negative too. So why is this such a bad thing? Because deflation often ends up in a death cycle where low demand leads to low prices, leading to low supply, and it just continues on and is what actually creates recessions. And when this happens, central banks really only have two things they can do. One is drop interest rates, or the second, print more money. So first, interest rates. Interest rates already are down to zero in many countries as a result of the crisis. And who would have thought there'd be headlines like this a year ago? Germany enters recession as over 100 banks charge negative interest rates. The German consumer comparison portal Verivox has examined over 800 banks in Germany and found well over 100 banks are now charging negative interest rates. This literally means the German central bank are paying banks to take their money, and banks are charging customers for holding money with the banks. And with other central banks now verging also on negative territory, clearly interest rates is not going to give us an answer. So is printing money working any better? Here's a few different graphs on how the biggest central banks have already printed $4.5 trillion in new money, and there's another $4.5 trillion on the way. Central banks are buying $2.4 billion in assets every hour as their balance sheet eclipses $20 trillion. There's a flood of money that's trying to keep the economy afloat and bump up demand. So why isn't productivity and prices going up? The answer is, while productivity isn't going up, prices actually are, just in all the wrong places because the economic system is broken. Inflation is the opposite of deflation, is what happens when prices increase. Here's two of the biggest examples of where inflation is killing us today. I mean, literally. One of the most essential products going up in price is food. Over the last 12 months, the food at home index has gone up 4.8%, with all 6 major grocery store food group indexes rising over that span. Consumer beef prices rise almost 23% in May. Beef packers like Tyson Foods saw an average processing margin of $1,805 per head in May, more than threefold the 5-year average of $526. So these are record-breaking prices for food right now. The second inflation, which is creating a massive bubble, is asset inflation. This is when the money that's being printed doesn't even reach our pockets. And that's because the banks and investors that the central bank's $4.5 trillion has gone to would rather go and park it in assets that will then go up in value rather than actually getting it out to the economy. That's why we're seeing record stock market prices right now. Navigrat says stock bubble spurring dangerous valuations. Mike Navigrat, longtime money manager, says the stock market is unhinged from reality as it rises higher and small investors should get out before it crashes. We are in irrational exuberance. This is a bubble, he said Friday in a Bloomberg television interview. The economy is grinding, slowing down, we're lurching in and out of COVID, yet the tech market makes new highs every day. That's a classic speculative bubble. I'm sure like me, you've seen many different head-scratching articles on different commentators saying, how is it possible that the stock market keeps going up? It's not about the stocks, it's about asset inflation. It's not that the stock market is the best place to invest in, it's simply one of the few places to invest in. Remember when, as a kid, you'd watch a cartoon where they were filling up a hose with water, and because it was blocked somewhere along the way, there was a bubble that just kept on growing and growing and growing, packed with water until bang, eventually the whole thing exploded. That's exactly what's happening right now as the Fed and other central banks are pumping money into the financial system, and it's getting blocked before it can even reach the economy itself. And we're not just seeing stock market prices going up, we are seeing all asset prices going up. That includes gold, it includes cryptocurrencies, it includes commodities, it even includes property prices, which have not just maintained themselves, but in many markets are continuing to grow. And it's not just asset prices which are going up, it's unemployment which is going up at the same time to record levels. In the week ended July 4th, under all state and federal unemployment insurance programs, including gig workers, jumped by 1.4 million people to 32.92 million. The Department of Labor reported this morning it was the highest and most gut-wrenching level ever. So we are actually in a crazy situation where we have both deflation and inflation going on at the same time, which brings me on to the third subject, hyperinflation. In the same way that deflation can create a death cycle downwards, hyperinflation can create a death cycle upwards. It's when the bubble eventually pops and the government, having nothing else that they can do, just keeps on printing money while productivity can't keep up. Too much money that's trying to chase too few goods. This always ends badly, triggering a rapid drop in the value of money itself. One of the best known examples of hyperinflation is what happened in Germany with the Weimar Republic in the 1920s. In 1914, the exchange rate was 4.2 German marks to a US dollar. Just 9 years later, it was 4.2 trillion marks to the dollar. Here's a story of exactly what happened during that time, together with some pretty crazy images of what people were doing with that money once it became worth less than the paper that it was printed on. The out-of-control inflation began somewhat mildly during World War I, as the German government printed unbacked currency and borrowed money to finance military expenditures. The strategy was to eventually pay off the debts by seizing resource-rich territories and imposing reparations on the vanquished allies. But then Germany lost the war and ended up with massive debts and reparations to the allies to be paid under the Treaty of Versailles. Inflation crept up slowly at first before accelerating rapidly in late 1922. The exchange rate ballooned from 2,000 marks per dollar to 20,000 to 1,000,000 and beyond in just a few months, riding on a growing wave of economic panic and mistrust. The price of a loaf of bread went from 250 marks in January 1923 to 200 trillion in November, when Adolf Hitler and the Nazi Party attempted the beer hall putsch, a failed government takeover. And if you're wondering how this hyperinflation relates to both Hitler and World War II, after his failed coup in 1923, Hitler was put in jail, and that's where he wrote Mein Kampf, which means my struggle, that became the basis for the entire philosophy for the Nazi rise to power and the whole idea of Germany reclaiming its empire status. That led to the rise of the Nazi Party and eventually World War II. Now you might be thinking, well, that was almost a century ago. Well, at least we're not having hyperinflation yet today. Except we do. We've actually got more countries in hyperinflation today than in any other time in history. So let's start with South America. Venezuela surpasses Weimar as hyperinflation expected to hit 1,000,000% by year end. And that was in 2018, where for the last 2 years, hyperinflation has continued out of control. Here's an article from this week. The local currency has lost 77% of its value in 2020 and depreciated 3% in each of the last 2 days. At the end of April, Maduro increased the minimum wage by 77%, which includes mandatory food stamps, but that it still amounts only to an equivalent of $3.80 a month. A family of 4 needs $250 a month to buy the basic necessities. A study published on Tuesday by 3 main universities found that 4 out of 5 Venezuelans could not afford the basic necessities. And Venezuela isn't alone. Argentina is one of several South American countries to undergo hyperinflation and currency crisis in recent years, with the government defaulting on its loans and record 9 times. According to a report by Bloomberg, Argentina's inflation has outpaced expectations, with the current rate reaching roughly 50%. Imagine if every year you knew that your currency was going to drop by 50%. So let's move on to the Middle East. Also from Bloomberg, Lebanon's economic crisis is spinning out of control fast. While politicians and bankers trade blame on the airwaves, the country's pound has lost nearly 60% of its value on the black market in the past month, threatening to suck the economy into a hyperinflation spiral. Food prices are rising so fast that the army took meat off its menus last week. Blackouts are spreading as fuel runs out. Facing ruinous losses, well-known retailers are closing until the currency stabilizes, adding to worsening unemployment that's expected to tip half the population into poverty this year. A spate of suicides over the past week have been linked to the dire economic situation. We've reached the point that we feared most, said opposition lawmaker Sami Gemayel. Nothing is going to stop the collapse, which is now on all levels. Traffic signals have stopped working, streets are no longer lit at night, and roads already potholed are falling apart. Lines outside bakeries and evenings by candlelight are conjuring up grim memories of civil war. Like Venezuela and Argentina, Lebanon also has defaulted on its government debt, which means that the government has no choice but simply to print more money. And I'll come back to exactly why that leads to hyperinflation. But first, here's a few more examples. Iran to cut 4 zeros from currency to fight hyperinflation. President Donald Trump in May 2018 withdrew the United States from a landmark 2015 nuclear agreement between Iran and world powers, under which Tehran pledged to curb its nuclear activities in exchange for sanctions relief. Washington then reimposed more sanctions on Iran, dealing a hard blow to the Islamic Republic's economy. In recent months, the rial has shed more than 60% of its value, with hyperinflation also accelerated by the economic consequences of the coronavirus outbreak. Syria crisis, hyperinflation, and starvation. The price of a typical food basket in Syria has increased by 200% in the past 6 months, according to the World Food Programme. Many grocers, shops, and pharmacies have shut down as business owners cannot keep up with the changing prices. The UN estimates 11 million people were already in need of humanitarian assistance in Syria. According to a WFP survey in April, 9.3 million people had food insecurity. 87% had no savings. The massive rise in prices of food essentials is alarming. Many people cannot afford to feed their families based on salaries that remain the same despite inflation costs. This is happening in our world today, and it's happening at an unprecedented rate. Now on to Africa. Hit by runaway hyperinflation and a rapidly devaluing currency, Zimbabweans are watching their earnings evaporate. Unemployment has reached an estimated 90%, with a rapidly devaluing currency and hyperinflation last measured in May at close to 800% on an annual basis. Most Zimbabweans have helplessly watched their earnings evaporate. Some cannot afford to feed themselves anymore. So what is Zimbabwe doing about it? This is an article from this month. Zimbabwe suspends stock exchange mobile payments over economic sabotage. The decision to suspend mobile payments will hit the economy hard, as more than 80% of all transactions are conducted on phones due to a shortage of banknotes, according to central bank data. In a statement on Friday, government spokesman Nick Mangawa said the move, which takes immediate effect, was part of efforts to arrest the slide of the Zimbabwe dollar. And by the way, this story links crazy currencies with why we end up with a crazy stock market. In 2020, the Zimbabwe stock market is the highest performing stock market in the world, and now it's closed. Here's a story from Bloomberg from this week. Panicked investors inundate brokers as Zimbabwe shuts bourse. Zimbabwe's benchmark industrial index has risen more than 7-fold this year to a record. Investors have used the domestic bourse as a haven from the country's collapsing currency and inflation of 786%, the highest rate in a decade. People are looking at a hedge against inflation. That's why they are switching from Zimbabwe dollars to equities. The stock exchange serves as a proxy to parallel market rates. So right now we are seeing hyperinflation taking on like its own contagion all over the world. Up goes food price in Nigeria, with the unprecedented rise in the cost of staple foods and consumables completely priced out of the reach of a majority of Nigerians. Obtaining a 3-square meal these days is now a luxury many can't afford. And the list goes on. Sudan, Suriname, Yemen, Libya, Haiti, Angola, all of them right now are in hyperinflation. An article from Fox News on the fate of Africa, the United Nations Development Programme Regional Director for Africa, we will see a complete collapse of economies and livelihoods. Livelihoods will be wiped out in a way we have never seen before. Okay, so you get the idea. Sometimes we are so focused at our own countries, we miss the bigger picture of what's happening in other countries all around the world. My companies already are in all different countries, so I actually have no choice but to be taking a global view. This crisis is like a car crash in slow motion, and I'm going to be reporting on this every single day for the next 3 to 5 years of this crisis. So please do make sure you subscribe if you want to be kept up with the very, very latest of what's happening, not just in your country, but in all the countries around the world. So what do you do with this information? If you're in one of those hyperinflation countries I just mentioned, then the first thing you should be doing is getting connected to other communities and other markets around the world. If you're an entrepreneur or an investor, there are many different communities around the world. We have our community, Genius U, with over 1 million entrepreneurs, where we're connecting with those opportunities and those ways we can support different countries in different parts of the world. Because even if you don't have the money, you've still got the same 24 hours of time as every other person on this planet. So as the value of money halves, the value of your time actually doubles. So this is the time to make sure you're connected to opportunities outside of your country. And the second is to make sure that you export the money that you do have. I know the countries that are in hyperinflation are trying to stop its citizens from doing this, but there's always a way. Find that way and make sure that you're hedging against the ongoing drop in your currency. And if you're in a country like the US, the UK, or any of the G10 countries, well then get prepared. Hyperinflation happens when a country defaults on its debt and has no choice but to just print more money to create liquidity. How many countries are in risk of debt default? This article sums it up. The International Monetary Fund, the lender of last resort to governments, reports that more than 100 countries have requested emergency loans. They themselves have said that this is a record which is far beyond anything they've ever experienced in history. World Bank data shows that excluding China, the total stock of long-term international debt held by middle and low-income level countries amounts to approximately $4.8 trillion. According to IMF staff economists, as of the end of May, emerging markets saw capital outflows of over 100 billion, nearly twice as big relative to GDP as those experienced during the global financial crisis. So there's 4 phases to the collapse and restructuring of what's taking place right now. Phase 1 is a drop in productivity and prices as a result of people spending less. So expect there to be prices dropping in all areas, from your rent through to education, through to airfares, hospitality, all the way through to technology. In fact, there is a great book which I recommend that you read, this one here, which is from Jeff Booth, called The Price of Tomorrow, which talks about how the deflationary pressures that technology generates, as well as the lack of jobs from technological unemployment, how this is going to have a long-term impact on what's going to take place in the next decade. And phase 2 is when asset inflation, as a result of all this printing of money, ends up with crazy valuations on pretty much every asset that's out there before the bubble pops. And so whatever you do, do not get caught up in the whole idea that now is a good time to be jumping into the stock market. Phase 3 is when the domino effect starts. And that's when, starting with the developing countries, we're seeing them already in South America, we're seeing them already in Africa, in the Middle East, they start defaulting on debt, they start falling into hyperinflation, and this creates a chain reaction where we then see the G10 countries, which are the ones that generate a lot of the actual debt itself, end up then coming under immense pressure. And phase 4 is when we then see fiat currencies all over the world, including some of the most established, like the US dollar, like the UK pound, that they also are no longer immune to the same hyperinflation. And this will happen when new monetary systems are created, which may happen 5 years in the future, maybe sometime within this decade, where they aren't so easily debased by governments or by central banks, and allowing us to actually rebuild trust in a new currency all over again. They may be cryptocurrencies, they may be blockchain-based, but they certainly will be tech-based. And my guess is that these are going to be more similar to the kind of community currencies that got created during the Great Depression, of which there were thousands and coming from bottom up, as opposed to being the ones that the governments themselves are trying to create. And whatever the new system happens to be, we are currently in a crazy situation where we are seeing deflation, inflation, and hyperinflation coexisting in the world today as a result of economies breaking down. So what should you be doing today if you're in the US, the UK, or one of the more developed economies? First of all, stay informed. Don't be looking for opinion, look for the facts of what's actually happening today. Second, make sure that you are diversifying whatever cash you have into multiple currencies and also into assets which are hedged against currencies. In my video, Dollar Crash Prediction, which you can see a link for here, I go through the actual details of exactly which currencies I'm in and how I'm spread across different assets which are hedged against those currencies. And thirdly, know that while, as Ray Dalio says, cash is trash, cash flow remains king. Focus on what will create cash flow regardless of what happens in the market. So even if the asset value of whatever property or business you're involved in was to halve, if the cash flow is still there, then you're still going to live another day. And finally, hedge local risk with a global strategy. Now is the time to be building a global network. And even if you've spent your entire life just focusing at your own country and investing in that country, this is a time to make sure that you're now hedging yourself across multiple countries, by finding the right opportunities, the right companies to be getting involved in, the right assets to be invested in, so that you're not limiting yourself to the risk in your own country. And the good news is this is actually easier than ever. Genius Group, which is my company, we are in multiple countries around the world, deliberately knowing that if there was anything that goes wrong in one country, we can always make it up in a country somewhere else in the world. And how long is it going to take for all of this to play out? In the other videos that I have been producing recently, you'll see that the top experts that I've been following looks at this at between a 2 to 5 year time frame. We can expect to see crashes and also big jumps up in asset values and in stock market prices within the next 6 months. But we also should be looking at this being a long-term thing where you should be planning at this more of a marathon than a sprint. As with every other crisis, of which this by far is the biggest I've lived through, the most important thing is to know that there's not a destruction of wealth taking place. There's simply a transfer of wealth taking place. And who's it being transferred to? Those who already have the vision and foresight to be planning the new future. As Alvin Toffler said, the illiterate of the 21st century will not be the ones who can't read and write. They'll be the ones who can't learn, unlearn, and relearn. I hope you found this video helpful. If you have, then please do give it a like. Do drop a comment down below. I would love to hear what you think about what I've shared, what you agree with, what maybe you disagree with, and I'll make sure that I go through all those different comments and answer as many of them as I can. I'd love to hear from you because at the end of the day, we're all in this together. And with that, I want to say thank you very much for watching, and I look forward to seeing you on our next video.